Hi everyone, Alex from Summerhill, just with a final video update for 2020. 2020 has been a year many would like to forget, but today we just wanted to touch on some important investment lessons that were reinforced during the year, which should be remembered. I know we harp on this all of the time, but the first lesson is focus on what you can control. The philosophy for effective personal responses to health and wealth threats is similar. In both cases, we must focus on what we can control. For health, when considering COVID, it included hand washing, mask wearing and social distancing. In wealth, it is focusing on your goals, staying disciplined, using the right mix of investments for your risk and emotional tolerance to best achieve those goals, holding your nerve when the world seems to be acting crazy, and rebalancing and diversifying your investments to manage risk. None of this can ever make uncertainty go away, but focusing on what you can control can make us feel less anxious and more resilient. Diversifying across different stocks and sectors was again shown to be crucial in improving the reliability of outcomes in 2020. Obviously, some stocks and sectors were more negatively exposed to the pandemic, such as tourism-related companies. But on the other hand, home entertainment stocks and some technology and healthcare providers did remarkably well. Being broadly diversified matters because it reduces the risks associated with individual companies or sectors. And we never know which companies will be impacted positively or negatively by future unknown events. This leads me to the next lesson, which is the next crisis will be different to the last. Of course, the pandemic is still very much with us. There inevitably will be further challenges ahead. Markets will become volatile again, but the causes will probably be different to the ones that we're currently experiencing. So we should not let 2020 entirely define how we think about markets and future risks for the next decade. From a market's perspective, events that feel seismic at the time will probably be a blip in the long run. So moving on to the next lesson, which is avoid market timing. When market volatility turned so extreme in late March, there was the temptation among many to sell shares and move their money to cash. But those that did so had to get two decisions right. When is the right time to sell and move to cash? And when is the right time to buy back into the market? Making predictions is far more difficult than we think. Financial markets are complex, and they adapt quickly to change as they process new information. Even if you could forecast news like the pandemic, you would still have to work out how markets will react. The severity and speed of the market movements in the first half of 2020 was a perfect example of the challenges and dangers of attempting to try and time short-term market volatility. And the reality is that it's not the short-term declines in markets that matter, but what we do during those periods. The consequences of short-term decisions based on fear and anxiety made in difficult times will likely have far greater long-term consequences than the near-term losses themselves. Now, one key aspect that can challenge your investment discipline is getting too caught up in daily market news and commentary. Which leads me to the final lesson, which is turn down the noise and look beyond media headlines. Most daily market news and commentary is based on stirring emotion, whether that be anxiety about the future or greed tempting you to choose the latest investment fad. With the media noting a global pandemic and worst recession since the 1930s during the year, the urge to take action could have been overwhelming. But the hardest thing to do is what nobody wants you to do, which is maintain a long-term perspective, at times sit on your hands and do nothing, and achieve your goals by following our process and strategies which were made in calmer times. There are always going to be risks involved with any investment strategy, but we believe thinking and acting for the long term gives you the biggest margin of safety for any approach. So on a final note, I will be taking some time off from 1 January to 18 January, and we'll have limited access to phone and email during that period. But Margaret will be available for any urgent matters. So from the Summerhill team, we just want to wish you and your families the very best for the holiday season, and we look forward to seeing you in the new year. Thanks.